Welcome back. You're still tuned into Halftime Report on CNBC-TV18. As promised, to discuss the demand trends in the industry and what's happening as far as the rural-urban split is concerned, we have with us Mayank Shah, who's the Senior Category Head at Parle Products, joining us now. Mayank, good afternoon. Thank you so much for joining us. Well, that's what we've been discussing for a long time, how rural recovery has really not taken place. Can you tell us what are the trends looking like right now in both the categories, entry-level and premium products as well, in both the urban and rural markets? Where is the demand coming from, and where is the weakness really being seen?
So, if we talk about FMCG as a whole category, I think urban demand has been pretty resilient, and we've seen good demand coming in from urban India since last almost more than 12 months. Sorry. However, if we talk about rural, I think there was a little bit of slowdown, especially in discretionary category. Essentials, I think there was tapering of growth, but discretionary category was something that was getting affected, and we saw that in last year. However, if we talk about the recent trend in last about 1.5 2 months, we've seen a recovery in rural demand, and the reasons behind them, if we talk about the reasons behind the recovery, there are two very important reasons that we can figure out. First is there's been good kharif crop, and the kharif realization to farmers is something that's helping revival of rural demand. So if we talk about the MSPs which have been declared by government and which have been started factoring in, we've seen the prices of agri products moving up, and as a result of that, the realization to farmers is better. So the kharif realization to farmers has been better, and rural primarily being dependent on agricultural income, they are getting benefited most out of it. So that's one of the important reasons why we are seeing rural demand recovery. The second reason that we have seen in in terms of recovery is primarily because of extension of schemes by government like Pradhan Mantri Gramin Kalyan Yojana. So they have continued giving grains free. So the disposable income of many consumers in the rural continues to remain high, because they don't have to spend money on grains which they get otherwise from the government. So these two are the factors which are helping revival of rural demand, and with robust demand coming from urban, we're pretty hopeful that the next 2 quarters would see a good revival in total demand, urban plus rural.
Mayank, thank you for joining in and giving us that insight, because up until now everyone was saying that post-festive season there was a bit of a slump, etc. So to that extent, it is heartening to know that over at least the last 1 month we've seen some green shoots of recovery, and with the things that you're talking about, easing of commodity inflation, higher crop realizations, the government's interventions, etc., and the upcoming budget as well. Hope is that rural demand will recover. But let's talk about your business specifically and the industry. At what rate did the industry grow in the third quarter? If you could break that up into rural and urban, how was the volume growth? How was the price growth? And Parle, did it grow faster than the industry?
Yeah, so we've been growing at about 7 to 8%. And if we talk about the total industry has grown by about 4 to 5%. If we talk in terms of breakup, I'm talking about volume growth. I'm not talking about value growth. Value growth is higher. Value growth happens to be higher because of the price hikes which have been taken in last 1 year. So if I'm comparing the growth rates compared to the similar period last year, CPLY, then growth rates are higher. Value growth rates are almost to the tune of about 8 to 10% for the industry, and we've grown by almost about 11-12%. So that's the kind of value growth rate. However, as I shared, if we talk about volume growth rate has been 4 to 5% for the industry, and we've grown by about 6 to 7%.
Okay. Sure, go ahead, sir.
Yeah, sorry. So, if we talk about urban and rural, urban has been growing. If we are talking about last, quarter, urban has been growing at a little higher pace. We've seen urban growth rates of almost about, if I'm talking about volume growth rate, we have seen at least about, 7 to 8%, whereas rural has been about 2 to 3%. However, as I shared just now, in last 1.5 months, we have seen, rural reviving. So, if you talk about the recent growth in rural, we are seeing, if we are specifically talking about the December month, then, we have seen almost about 4 to 5% growth in December for that particular month coming in from rural.
Okay, that's interesting that you are quite positive with regards to, the rural volume as well as value growth going forward. Just linked to all of this, then you've managed to take price hikes in the past 1 year, which you did quantify in terms of the value growth that you've seen. Is there a need to take further price hikes based on the cost inflation scenario? If so, how much? And can you then give us a sense in terms of where you expect possibly margins and EBITDA to probably be maintained?
We do not expect any price hikes, going forward. The outlook, would primarily be, our expectation for the price outlook is that the prices of commodities would remain stable. In fact, if we talk about, major raw material commodities like edible oil, sugar, and wheat, oil has corrected significantly. So probably from the peaks of about, almost 160, 170 rupees per kg. If we talk about edible oil, it's somewhere around about 94, 95 rupees today per kg.
Next standpoint, Mayank, just wanted to understand from an index standpoint, how has your raw material basket fared versus the same quarter last year and versus the second quarter?
Versus second and third quarter, it's more or less the same. There is a minor, dip in raw material. If we talk about, raw material cost, if we are talking about the index, then there's a minor correction about just 1 or 2%, not more than that. And the primary reason why, as I just shared, I mean, despite edible oil correcting significantly, if we talk about the other two major raw material, which is wheat and sugar, they have gone up, significantly. We've seen almost about, 20-25% increase in wheat and almost about, 15% to 20% increase in prices of sugar compared to last year. So if we talk about the weighted, average, the contribution of wheat and sugar happens to be higher than that of edible oil in terms of volume to volume contribution. And as a result of that, if we talk about the overall impact on cost, it has gone down marginally. It has not gone down significantly, which it should have, given the way edible oil has corrected. However, as I shared, since wheat, which happens to be the significant input, followed by sugar, since they have gone up, they have negated the impact of correction of edible oil.
Okay, all right. So we're going to leave it on that note. Thank you very much for joining in and speaking with us. So that's an interesting take, in fact, which is coming from Parle, considering that we did hear from the likes of Marico, Godrej Consumer, that yes, rural demand has been a bit sluggish. Those are the trends that they've seen. Urban has been better, but Parle seems to be quite confident in terms of rural picking up going into 2023. Take a short break, but up next, Reema will join in to analyze the expectations from the IT sector in our special segment, Quarter Se Quarter Tak. Stay tuned.